What you have in the United States, which I've been missing in Europe, is massive amount of creativity constantly and willingness to challenge old ideas. Everybody can be his own bank. You're my buddy, let's hammer something out, and we use other people's investors or government money to enrich ourselves. That's the system we are talking about here. And I was back then, and so I'm today, highly disgusted by that. But to think that there is this like central banker who gonna bail you out, like Powell or like Gard in Europe or some politician. People are being paid a lot of money. They're on the front page of all the newspaper, and they have no freaking idea what's going on. I think if you want to create wealth for people, in my view, that's the best option for everybody to do that, for everyone, independent of the amount of money they have.
You have a really fascinating background, and for the few people that might not know you and not aware of what you're doing, give us some of your backgrounds. What are you doing, who you are, and why you're excited about Bitcoin? Sure.
Well, my background is I used to start in academia. So I studied math, physics, major in math, did my PhD in mathematics, and after deciding that academia is not really the path I want to take forward, I decided to join banking, investment banking in the 90s, in the trading arm of an investment bank. And from that, I sort of like ended up on Wall Street, doing the subprime crisis and actually trading subprime derivatives. So I've been in the trenches when you watch the movie The Big Short, my direct boss was Ryan Gosling. So I was part of his trading team. I was his number two, trading out of London. Very exciting times. And first time as well where I could see something is broken in the system. As a banker, you don't really ask these questions. And later on, I worked out a bad bank of Deutsche Bank for many years, or for a couple of years. In order then to work the last few years of my career for Cantor Fitzgerald, where I was sort of like head structure advisor to Howard Lutnick, who was CEO back then, CEO and chairman of Cantor Fitzgerald, who now is the Commerce Secretary of the United States. And Bitcoin journey, because it's of course your show, started in my case in a bit of a different way. I was I think day one investor of Europe's, by now I would say, most prominent trading platform, not just Bitcoin, across different tokens, an Austrian firm. And back then already, before I got invested, one of the key members of this firm actually told me, an old friend of mine, even he's much, much younger, said here, why don't you get involved in Bitcoin? It's an exciting asset class. And so like I looked into that. I read the white paper. And interesting enough, working on Wall Street in New York in 2013, I think it was 2013, some of our traders on the foreign exchange desk that were sitting in the back of me, they actually traded PA. PA means for the personal account, not for the bank. The bank didn't allow that, obviously. Bitcoin. And why? Well, traders like volatility, and this Bitcoin, which nobody really knew what it was, went up like 50%, down 30%, up 200%. They loved it. It was like back then at like 100, went to 400, down to 50. Nobody knew. So I thought like, well, that's an interesting asset class. And because I didn't really have a directional view regarding Bitcoin, I decided to actually get involved via my investment in this company, which is a brokerage firm. That's my personal background as a Wall Street trader. I don't really care whether the market goes up or down. What I want to see is a lot of volatility. That's where we make the money. So I thought like that's the best way without even having a view whether it's going to go to the moon or go to zero. Well, that view then clearly has changed over the years. I spent much more time thinking about Bitcoin, reading up on Bitcoin, watching podcasts like yours, and sort of like got involved on even like in a straightforward manner, and turned to something that will say, well, I wouldn't say Bitcoin max. I think that's terms you guys use, but just say, I think if you want to create wealth for people, in my view, that's the best option for everybody to to do that for everyone, independent of the amount of money they have.
It's fascinating to talk with people that have first-hand experience with the 2008 and the film The Big Short. I think I saw it 2 or like 2.5 times or something like that. It's a great movie. How was it being there and seeing that, and how this probably impacted you a lot in the first time you kind of understood Bitcoin, because you saw the flaw in the system probably better?
Absolutely. So I will even go back a bit earlier. Why was a guy like me hired by an investment bank in the 90s? I never really had I was not invested in financial affairs at all. I remember when I was interviewed by the bank, they said, well, we've never experienced a guy who knows so little about anything like you guy. But somehow I was like a math guy. I understood math reasonably well and models. And back then, the belief was if you enter into a derivative, and I say that in a second what it is, then you need actually quants and mathematical geeks, what I believed, on Wall Street in order to price this type of risk, to evaluate these type of contracts, complex contracts. But the interesting part about derivatives is they've been around since forever, the futures market, but like the OTC, the off market, the over-the-counter derivatives are around since the 80s, late 80s. And pretty much it means, let's assume, Robin, you and I enter into a contract and we can say, okay, different interest rate contract. I'm going to pay you for the next 10 years, 4% fixed, and you pay to me 3 months rate every 3 months is being reset. So, of course, I know my outlay for next 10 years. And if rates are rising, you lose. If rates are falling, you gain. So, and this is the simplest of derivatives. And in order to price this transaction, in order to trade this transaction, you need sort of like people understand mathematics or physics or astrophysics reasonably well. That was the premises of the idea. Interesting as well, this system is based on trust. So you and I enter into a contract, and now you and I sort of like understand what the valuation is. Because on a daily basis, there's going to be exchange of money. If I'm in the money, so my contract is up, you have to wire money to me. If in your favor, I have to money to you. So it's like a trust system. So what happened then in the financial crisis? And by the way, it was something which the Fed was actually, and the central bank of the United States was very proud of developing in the 90s. Alan Greenspan, I think he gave this very famous speech in 1999, where he said, thanks to the innovation in derivatives market, which he didn't want to regulate, we are able to actually smoothen our financial system because we are able to unbundle the risk and distribute it to different people. That was the theory, which blew up in the face, big time. So what happened then in 2005-06 was after the dot-com shock, the first big shock for many, many years for the US capital markets, rates were lower and everybody got involved in the property market. Bill Clinton came up with this, what he thought a good idea in the 90s, that every cab driver should own his own house. But somehow, if you're a cab driver, self-employed cab driver as an example, you don't have the means to buy a house. So therefore, he said, well, we have to lower our lending standard. That's called the subprime market, not subcrime, which some people say was the same. So subprime market. So pretty much lending to people with not great credit score or no credit score at all. And that was the asset class I traded then. So I worked for Morgan Stanley, I went to Lehman Brothers, and in 2004-05, I went to Deutsche Bank, where I worked for Craig Clipman, alias Ryan Gosling, Big Short. And my task was to develop the derivatives market for subprime, which I did. And we traded a lot back and forth, like selling the risk, buying the risk in any direction. But what we could see early on was there's a crack in this market because this market is much more riskier than people believe. So we started betting Craig and I working for him against this market. So our view was ultimately this market will collapse. We didn't really expect it's going to go the way it went, but we expected there's massive risk, and we communicated very clearly and openly to investors. It's like the parallels to Bitcoin is quite interesting. So we're very open. We say, guys, I think there is a risk. We're in a business to make markets, so we buy and we sell. But you guys want to be a bit more careful because ultimately it's highly concentrated, the same risk. And now it's interesting. The biggest bank, Wall Street Bank, with the smartest people and highest paid traders, they were always like, no, that's going to go up. It's going to go on forever. So we've seen massive trading volume, massive interest in this product from all the investors. But we didn't have even enough cash bonds to satisfy the demand which was out there. So that's where I came in. I created derivatives. So in a synthetic version, if you say, for example, Robin, you say, I want to have exposure to this subprime bond. Now we don't have the bond, but I say, listen, now the problem. I'm going to give you to you in derivatives format, which means I pay you whatever the subprime bond pays. But if the bond defaults, then you pay me the recovery rate, like my 1 minus recovery rate or 100 back. So it's like an insurance contract. And that's a market I developed, and others, Goldman Sachs, Bear Stearns, as well, working with these firms together to develop this market. And what happened now in the financial crisis it's quite interesting. It's not dissimilar, I think, from today. There was a tremendous liquidity in the market in 2005-06. Nobody could see how could anything go wrong. But now I come to the point of trust. Suddenly people realize, whoa, this subprime bonds, they seem to be more risky than we thought. It started like end of 2006. So just before, a couple of months earlier, we entered into this massive transaction with Morgan Stanley. It's public, so I can say that. It's even in the book. In the movie, you can see this big trade. I work for Deutsche Bank versus Morgan Stanley. And so they say, we want to own 3 billion of that risk. And we say, okay, fine, we give you 3 billion, not in bonds, in derivatives format. That's what I did. For that, we have to pay you every year around 7.5 million. But if that goes wrong, you have to pay us potentially the full amount. Now, the film, I think, talks about that. We ended up with I think we paid them about 12 million plus minus over 1.5 years, and they had to pay us more than 2.9 billion. So I think that's the biggest gain for Deutsche Bank in history. And Craig got paid accordingly, according to the movie. Not so much me, unfortunately, but so it worked out. But that's an interesting part as well, which we can go to in the Bitcoin story. When it happened, this big trade between us and Morgan Stanley, we were really, really happy. We're like, high five. It's better than these guys from the other side, these assholes from these arrogant banks and blah, blah, blah. But suddenly we realized, it's like in a plane. We were right, but it looks like the whole system collapses. So from like being so happy and high five, we got really nervous. Anxiety kicked in for all of us to say, there is no winner. Why do I say that? I know Bitcoin Maxi talk about the end of the world, and like, you do not want to have this scenario. There's no winner. Even the guy who is right is ultimately the loser. So, and what happened at the end of the day, and during that time, I realized the system is massively broken. And one thing I've seen, Robin, is interesting, that the subprime market, which peaked back then, thought is a big thing, was only a 1.5 trillion market. It's not really a big market. It's like when you think about, I think the investable wealth is like 500 trillion, 600 trillion numbers all over the map, up to 900 trillion. I see different numbers. So it was like 1.5 trillion. Maybe back then the global wealth was like 250, 300 trillion. So it was like a fraction. But what happened is the trust amongst the players broke down, because we had all these derivatives contracts and nobody knew anymore who had which exposure. The banks didn't know, management didn't know, And suddenly we say, we are not entering, and that's the worst thing, we are not entering into a transaction with this bank or this company XYZ because we think they have an exposure. No, they turn around and say, well, we don't trust these guys. So suddenly from like a system built on trust, in literally no time, you have no trust. It's such an opposite to Bitcoin, where actually the foundation is a trustless systems, which is hard to break, or if at all, I don't think you can break it. Banking is a trust business, and trust can disappear in a nanosecond. One incident, one weird thing, some people say, whoa, what's happening? And Wall Street operates like that. Wall Street is like the shy deer, where like, oh, what's happening is running away the other direction, and there is no market anymore. It just breaks down. And I think that was my realization. And then to finish the question in a lengthy way, what I learned as well during this situation was the following: the belief in senior people in the upper echelons. They know exactly what's going on. I think that's on a more general level, people believing in their government, believing in like these people, CEOs, companies know exactly what's going on. They're going to steer, or central bankers, they're going to steer the whole ship into the right direction. Well, what I could see, we were trading from the morning to the evening, working around the clock, totally stressed out, the traders. But when I looked towards the corner offices where all the big cheese were sitting in the corner office, they were steering at the Bloomberg terminals, and I could see and talk to some of them. They had no clue what was going on. They were shocked. Politicians were shocked. Central bankers were shocked. You couldn't really expect any help. And ultimately, the system was bailed out, which in my view was a massive mistake. I would have lost everything, but that's fine back then. But I think the belief that somebody knows what's going on, I think that's just wrong. I think you can only trust yourself and be accountable for your own actions. And you will make a lot of mistakes on the way. But to think that there is this like central banker who gonna bail you out, like Powell or like Lagarde in Europe or some politician. I think that's what I learned back then firsthand. People are being paid a lot of money. They're on the front page of all the newspaper, and they have no freaking idea what's going on.
I love that. And it's so interesting because most of my guests agree with that, and most of my viewers and audience probably also agree with that. But if you step out of the Bitcoin bubble, you really see that people trust in those central bankers and the bankers, and they know what they're doing. They have the university degrees. They have been in banking since 10, 20, 50 years, whatever the number is. And they really trust in those systems. I'm always boggled by like how high the confidence of normal people still is in those papers and those institutions, when we have seen so many times in history that you cannot trust it. Like the evidence is really really stacked against them, kind of.
It is always. And one thing, I think capital markets is capital markets for me is a bit like Bitcoin. It's a very powerful, very resilient beast. Wall Street is a very powerful and resilient beast. Why? Because these guys, because everybody does whatever they do, trade and show and yell in the old days, especially. If markets blow up, then like a lot of firms go under, a lot of Wall Street firms go under. If you go into the list of like the big Wall Street firms from the 70s, you won't find, apart from Goldman Sachs and Morgan Stanley just made it, any other firm which was around back then. And Morgan Stanley and Goldman Sachs, let's face it, they got bailed out. So otherwise they wouldn't exist as well. So, but they constantly invent themselves. They always get involved in new things. And I love that. They move from A to B to C. And what's great about Wall Street, and that's not dissimilar from the Bitcoin scene, you can be a little guy at Wall Street. So I was like a very, very, like I was old in terms of age, but very junior in terms of ranks when I started there in the 90s. But you can become very successful yourself by being a successful trader, by doing be hard-nosed and doing something, and everybody does his own little thing. And it doesn't matter whether you're like the senior managing director or you're an analyst, you can make as much money as this back then, not true anymore, as a senior guy. What unfortunately happened, and that has changed after the financial crisis, governments thought and regulator thought, let's fix this problem of Wall Street by actually imposing more regulation, which is insane. So what was the outcome? I think the outcome is that we have much more systemic risk today than back then. Because one thing which hardly anybody knows, the banking system, and here now I talk as a former insider, is covered by apparently like very strict rules, how financial rules, risk mitigation rules, and risk management. So therefore, you should trust the system. And it's being set up in a way, and I think hardly anybody knows, there is a firm which is owned by all the central banks around the world. It's called BIS, Bank for International Settlement, based in Basel, Switzerland. People wouldn't even know, what is that? Well, this institution actually is responsible for like the regulatory framework for banks, how much capital they have to have, how the models have to run, and so on. So therefore, you might have read in financial news things like Basel 1, 2, and 3, and 3.5. So these rules, actually, is quite interesting, lead to the fact that all the banks tend on buying the same crap at the end of the day, because it looks great under this model, which being designed by this like committee. And the interesting thing is, like, there is one asset class which always has the best treatment, because this committee defines risk-weighted assets. So if a bank buys an asset, it gets a risk weighting. And it means if you have 100% risk weighting, you buy, for example, 100 million of a bond or loan. That means, and you have a risk weighting of 100, it means you have 100 million of risk. Against 100 million of risk, you have to have, right now it's like, let's say 10 million of equity capital. One asset class has zero risk weighting, which means you can have almost as much as you want. Government bonds. Hardly anybody knows. Banks tend to blow up actually on government bonds, because for them it's a wonderful way actually to place their government bonds and to let the system run. And that's being designed like that. So I think that's something where I can see even in the future massive blow-up risk coming from that. We have seen it, by the way, in Europe already. You're in Europe, in Austria, 2011 Greek government bonds, zero risk weighting, and we lost our shots, like banks and insurance companies mainly. So I think and here again, there's this belief you have complicated models. And when people talk about Bitcoin, like, oh, it's complicated, it's very tough technology. Bitcoin is actually very easy. It's like the code is like, I haven't read a code, but it's not that long. I know the key elements. Compare that to a financial institution like a bank, where you have the central banks behind and you have this like complex models, which, by the way, being a math guy and I understand some of these models, you can arbitrage them like crazy. That I wouldn't even believe. I think that's really a danger, because suddenly you have people getting involved, as you said, Robin, with PhDs, smart, being paid so much money. They know exactly what's going on. I tell you, these people have no freaking idea. They're really, you always should trust a hardcore, simple Wall Street commodity trader with a beer belly, talking rough. These guys you can trust. These people with PhDs, or happen that I have one, but usually, and talking to big gains and model, do not trust them.
Good that I don't have a PhD.
Well, it's not necessary.
It's so interesting. Are you familiar with Larry Lepar's book, The Big Print? Basically, like the name play with The Big Short, where he kind of says like, oh, there will come a huge print event, which will be maybe similar to what The Big Short is coming. Do you think that this is something that anyways comes when the system's going, and not even if someone high up is going in a really good direction, he has the best intentions, can reverse that?
I don't know the book, but I know of him, and I heard maybe I should really read the book. Yes, I think big print. I would say falling, and I've seen it in subprime market risk. I would say blow-ups. Usually, they always happen. It's like just part of financial history, but they always happen in a way none of us expect. That's one thing. It's like you think it happens that, and actually happens in the other direction. Subprime, nobody expected that market could be a problem for the overall financial market because it was not a big market, but it sort of like brought down trust to zero. People didn't trust institutions. People didn't trust each other anymore. So do I think the big print could money printing? I would assume is a big issue. Absolutely, absolutely. I looked lately, and I'm not an economist by any means. I'm more like a gut feeling guy who sort of like applies. When I said models don't trust model, trust simple models. That's important. Simple models. And I say something to that, how we spotted at Deutsche Bank and how we traded. We use simple, commonsensical models, easy to understand, and say, actually, yeah, that's sort of like should be the outcome, and a complicated, high sophisticated quantum mechanical models. We're like, okay, nobody really knows what's going on. Only this one guy, and he fell sick. Then we are in trouble. So I don't believe in that. So I think when it comes to the money print, between I think the early 70s, since the United States went off gold standard, 71. I think the money supply increased roughly by 6.5% per year. That's actually an interesting point because that doesn't sound very high, 6.5% a year. But what now kicks on in, and human beings are really bad at that. We are very bad at to assess exponential growth. Since then, I think we started with 400 million back then, 400 billion of money supply M2. We ended up today at like around 22 billion in the United States. So roughly, if the number is right, that was even at 300 billion in 1971. I checked it, I think yesterday, something like that. And today is like running at 36 trillion, running more like at 7 to 8% annual growth. That's like where compounding kicks in. And I think that's an interesting point, but I think it comes to that one. When I spent more time in New York, I moved into, ultimately, in 2009, but in 2005, when you drive through Midtown in New York, there's this like a national debt watch, that tower debt watch. I was always impressed by this, like where you see the national debt of the United States. And I remember in 2005, it was around 7.5, 8 trillion. And then when I moved over there in 2009, 10, I was like, ooh, this thing just flipped to 10 trillion. And you see like the numbers, how they go up, like this is crazy. Like really, it's like, this is like so much money is being like so much debt is being created any second. And just lately I was in New York, beginning of the year, a couple of months ago. And again, I think it's now at like 36 trillion. And you're like, just like, wow, within 20 years, it went from something which is like 5, 7, 8 trillion to like 36 trillion. Now do the math for one moment. I like to have very simple math. Like that's nothing. When you're on Wall Street, you're being trained to have very simple rules. So you double if you invest your money and you have an interest rate of let's say of like let's say 10, and so then you know the rule of 72. So you double the money always in terms of number of years, which is equal to 72 divided by the interest rate. So at an interest rate of 10%, you will double the money roughly every 7 years. 72 divided by 10. Now, the debt increases roughly by 7-8% every year, which means 72 divided by 7, so around every 10 years, you see a doubling of debt, which is actually what we've seen, which means in 20 years, we have 2 doubles, which means 4 times the debt of today if nothing changes, well above 100 trillion. Now you pay interest on that, 4 or 5 trillion every year. This is like a huge part of your GDP, which grows with like 1.5%, 2%. So ultimately you run in deep, deep trouble. And I think that's what you see right now under Trump, Doge, Latnik. They realize the exponential growth now finally kicks in, and that's not sustainable, and not even for a nation like the United States.
Is there where the strategic Bitcoin reserve comes in, or are they just looking at it as like, oh, we buy it now because the voters like made us buy it?
Well, I don't know how much is real in that one. Whether I believe, and I've seen the math and analysis from different people saying they should own 1 million of bitcoins, and then it's like in the US, when you do I think it's baseball, like they have this concept like Hail Mary. You just throw it, like at the end, like you're about to lose, just throw the ball like into the crowd and something maybe happen, and maybe you're lucky and you win. Very likely you out. Maybe it's a Hail Mary for them to say we do it that way. It's not. It's not actually. I'm not sure how serious they are. I think they make all the right noises. I think they look at it seriously. They understand us. I think what I realize, I would say, I would maybe take the Bitcoin reserve of the United States when Trump talks about that as literally as people think it is. I think that's often what happens, especially in Europe. You say, oh, but he said exactly that. So fact check. So he said that. So this is going to happen. Oh, he doesn't do it. He's a liar. No. I think what's happening here is he takes it as like a bit of a test balloon, a bit of an idea generation. For him, it's pretty much saying what we have currently is broken. We cannot run it for many years left. So we have to do something. So he comes up with like the opposite side, which is Bitcoin reserve, which is Bitcoin. I would say more of like from like it's you cannot really take him as I always say literally, but you should take him absolutely seriously. I have huge respect, and now I think now 80% of your clients of your viewers gonna puke and say, "Oh, what is he?" Like I think he's an interesting guy. He has the ability to open up new horizons and he does it in his very unique way with language. And here it's the same thing to say, let's talk about Bitcoin strategic reserves as the opening up the mindset to say the system we have currently in place, it's very likely gonna fail. Let's open a bit the way we look at our financial system.
I actually think there are a lot of Trump supporters in the Bitcoin community. I actually think one clear proof of that is how much money David Bailey in the Bitcoin magazine through Bitcoiners raised for Trump. I've heard the metric, right? It was just like so big. I don't know, like I cannot remember it, but it was a huge amount of money that Bitcoiners kind of raised for him. So that like that's a clear indication that Bitcoiners are at least in front before the election, behind him. After that, with the shitcoinery, I heard more and more critical voices. But there also on the other side, there was the campaign of what was it called? Bitcoiners for Harris or something like that. So there are also Democrats that supported Harris. So it was, I think, from the numbers a lot smaller, but it's an existing group also. Like that's where we come back. Bitcoin is non-political. It's something that is neutral and on both sides. But I would say it has a tendency for Republicans and Trump and less so on the Democrat side. At least what I see.
Absolutely. I think the Republicans in the United States stand a bit more like what, especially Trump, not everybody, but I think they carry the ideas of the founding fathers of like liberty, happiness, freedom, that type of idea. And I take that very seriously, some of them. And it's interesting. If I'm remembering correctly, you got actually a bipartisan resolution around the central banking digital currency, where actually both sides, this stuff is not going to happen here, which tells you the idea of like liberty even works across both parties to say, whereby Europeans are, oh, that's a good thing. It looks very efficient to us. And like, I don't know what's wrong with you guys. This reminds me of Soviet Union type of style. And this is like, I'm German by background. I don't live in Germany for the last, oh gosh, I'm already old, more than 25 years, quarter of a century, almost more than my life. I lived outside of Germany. But I can see from outside that there is unbelievable that we just came out in Germany, East Germany, I'm West German, of like the social democratic system, which never worked, total control. And we are willing again to trade into total control and say, okay, again, for what you said, Robin, these guys, they're so smart, they can talk so well. I'm just a simple man, what do I understand? And let's put my money on the Sparbuch. And then it's another crazy thing when I took for my friends in Germany is that, why do you put the freaking money on the Sparbuch? Even let's invest in equity. That's a good way to start. Say, oh, that's risky. But this thing is worth, for sure, 100% probability, much less in 5 years from now than today. They don't comprehend that. And I think that's the very evil thing. And Americans are a bit more open and more creative. And I think that comes to the idea of what you said earlier, Bitcoin reserve. It's more what you have in the United States, which I've been missing in Europe, is massive amount of creativity constantly and willingness to challenge old ideas. And I love that.
For the Americans, a Sparbuch is basically a savings vehicle that I'm trying to get everyone out of. You lock your money up for like 4 or 5 years and you get 1% interest or something laughable small. So I don't know, like I cannot get there's not a single reason why I would do that.
Absolutely. And I think but I think Bitcoin can be on a bigger theme. I think can be a big solution. It's a big solution for everyone. I think that's the most dominant view for me. Is like, and I tend to write like little tweets on that to say, everyone can be his own bank. This is a revolutionary idea. Like the idea that I can wire Bitcoin right now from here, sitting in London now, to you sitting in Vienna, and we don't need a bank, and we can see it, what's going through. We can go to the meme pool. We know exactly the transaction, and we can do it even on like Saturday night. And I think the idea is so like not well understood yet. What actually everybody can be his own bank. You're not forced to trade for something bad because the people from Argentina understand it very well. If I get my pesos now, it's like worth like 25 less percent less half next week, and now inflation came down a lot thanks to Milei. And I think they understand to just buy anything, any crap. And I think to have sort of like time to say, I don't have to do anything. I don't have a good idea, and I really want to see what's going on. And if I think, that's a good one, I really want to have that, then yes, then I really use that. So Bitcoin, I think has some wonderful features, and I can see ultimately, but far down the line, and I'm way too old, Robin, way too old, that I'm gonna experience that it's not going to be just like the HODL characteristics which people love. I think it's going to be the medium of exchange, like your Austrian Karl Menger, Austrian School of Economics, talked about that a lot. What is money, currency, and ultimately as a unit of count, to where people measure actually stuff in Bitcoin, and think about in Bitcoin and say, wow, in 2015. When Bitcoin was, let's say, at 400, 500, 800, to buy a house, I needed like, let's say, 400 Bitcoins. And now I need like 4. It's like, no, that's like, I think people, that's an idea to bring home. And when I took to France, I so like do it. I do it like very little. I talk to friends and families, and I get sort of like, no, that's interesting. In the beginning, they say, you're thinking that's crazy. Bitcoin, what's that? It's a scheme, it's a scam, and all that. But coming from the banking side, I carry, and I know it gives me some, in the wrong way, credibility. Because people say, "Oh, what do you think about the stock market?" I'm not able to look around the corner. But when it comes to Bitcoin, I think I can say I think it's a very wise decision if you really want to become independent, wealthy, and free from any government. It's somehow it sort of like works beautifully.
Do you think when we come back to the Big Short and what maybe comes a second time, do you think Bitcoin is now the best bet against the system falling down?
Absolutely. It's interesting anyway, like when Bitcoin started, I think the white paper was written, if I'm not mistaken, around like October or something, September, October 2008. That was the time, September 2008, Lehman Brothers went down. I used to work at Lehman Brothers, was that day until 2004. So I was not around then at this place. And we've seen actually the low of the stock market in the S&P 500 in, I think, March 2009. And just around that time, the first block, the Genesis block, was mined, I think, January 3rd, 2009. So it's really strange. And it's a really weird coincidence, and not into conspiracy, that just around that time, so like it looks like a very difficult cryptographic questions, double spending, was solved, I think, by one guy. I don't think there's so many people that wouldn't keep the secret for too long. And so like given to us. And my statement is the following. If the financial system would have been fixed in 2009, if you had not bailed out any of these banks, if this whole thing just would have had a big reset, and the bankers who created the mess, I can tell you, I know guys who lost hundreds of millions up to billions. And you think they're never going to find a job anymore. No. They actually not only rose in the hierarchies, they even became very rich in a way. This is crazy. And that's where I realized this has nothing to do with Wall Street. That has nothing to do with capitalism. Actually, this is nothing else than Neptunism. It's the difference. It's like, you're my buddy, let's hammer something out, and we use other people's investors or government money to enrich ourselves. That's the system we are talking about here. And I was back then, and so I'm today, highly disgusted by that. Highly disgusted. So I think Bitcoin, if the system would have had a total reset, which it didn't, today nobody would talk about Bitcoin. It would be literally at 0.00, some like worth nothing. I think Bitcoin reflects, the price of Bitcoin reflects the anxiety of society around the current financial system. And the higher the prices, the more anxiety is actually there to say, is the system going to break down? That's sort of like, that's why it has been my view for many, many years. It's like almost like a fever thermometer in terms of like stability of the system and trust in the system. And with the rising Bitcoin price, this is going to go down. Therefore, nobody trusts the system anymore. And therefore, you can see central bankers. I have a good friend of mine who works at the Fed. He hates Bitcoins. The ECB, they just hate it because they cannot really defeat it anymore. And I love it. I love it.
Let's take a break for a moment and appreciate the beauty that Coin Vigilante has made with the Bitcoin watches. Those watches are the most amazing, the most elegant way of showing that you are a true Bitcoiner. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. And now if you have Bitcoin, I really do hope that you don't have it on exchange. But if you do have it on exchange, I have two ways for you to deal with that. that. The first way is you put it on a hardware wallet. That's the entry for you to get into the self-custody game. I recommend BitBox, Bitcoin only edition for that. It's a super simple and secure way. And if you check out the link in the description, you even get 5% off if you use the code Robin. And the second way is the Bitcoin way. The Bitcoin way is your all-in partner in terms of how to get the most out of your sovereignty. They will personalize for you a self-custody setup that is perfect for your individual situation. They will show you how you can secure your own devices. Securing your Bitcoin is not enough. You also have to keep all your devices secure. One topic that is overlooked often is the inheritance plan. What happens with your Bitcoin once you are no longer here? Do you have a plan for that in place already? And last but not least, if you're in jurisdictions where you don't feel safe, it's better to get a plan B. For all that, head over to thebitcoinway.com/Robin to get a 30-minute free call. And just a quick side note, I will be for the first time ever speaking at the Bitcoin Prague event in June. It will be absolutely legendary and I'm really looking forward to seeing all of you there. You can get your ticket in the link down in the description of Bitcoin Prague, and very important, use code Robin to get 10% off your ticket. I'm really looking forward seeing you there. I love that description of the Bitcoin price being a signal or a sign for how bad the fiat system is doing. That kind of fever thing. It's really cool. As someone that looks at math, you probably also look at all those stock to flow, power law and price models. Is there something to that, or is that just a descriptive way of describing the past price performance?
Well, I came across the power law from Giovanni, and in the beginning I said you shouldn't trust models. I've seen it in the banking world. But it's different when I look towards Giovanni's power law model. I came across a tweet which I think sent out like 1.5 years ago and something like that, where he said Bitcoin price versus time is a scale invariant. And immediately I got it like, oh, I understand what that means, because when I did math during my PhD times. One of the subjects I did was nonlinear dynamics, scale invariant system, fractal geometry, very, very, very interesting subject. And I said, well, let's check that. And so I got the historical Bitcoin prices. It's been done. You can do that in like a few minutes and ran, and you can do it, and everybody can do that in an Excel sheet. A linear regression model on the log of price and the log of time. And the time is from the beginning of the Bitcoin network, like 2009, January 2009. And then you see a straight line with certain dumps, but sort of like the statistical measure, one of them is like R square is in the 90s, very high. I've never seen something like that. And that's one thing, you have a model, but then as well, to have the philosophical view, why would that actually make sense? And because I did nonlinear math, you understand power law actually surrounds us everywhere. When you have, for example, many individual actors doing their little thing, working against each other, with each other, you actually, the collective has certain characteristic which none of each individual has. Another way to say it is to complicate maybe. You are much more than all your individual cells. You have thoughts, you have speech, you can do all these things. Bitcoin is much more than just the mining nodes and the miner and the investors. It's so like has this network effect. So more and more people coming in. So I think it fits very well to the power law scale-free model beautifully, and that's actually one which gives me, like, as a thinking of Bitcoin, the power law is a bit like a North Star for me, which is like sort of like this confidence to say, well, that gives me an idea where Bitcoin ultimately should end up. It's sort of like similar when I do investing in stocks and you're investing in index S&P 500 or NASDAQ 100. So like, on a daily basis, a lot of things can happen, but over long history, for example, S&P 500 for the last 65 years or so grows with 10%. That gives you sort of like, and we had Vietnam War, we had the oil crisis, we had .com, we had financial crisis, we had everything, and COVID. It grows so like over a long period when you really zoom out. And that's, I think, for Bitcoin, that's being provided by power law. And the other models, I don't really, I think stock flow seems to be very complicated and adjustments. So power law is, I think I like it seems to be working very well and say something to that as well from what I could test. Secondly, as well, the simplicity. It's a very simple thing to say price of Bitcoin is proportional to the time elapsed since the first Bitcoin was mined in 2009 to a power of 5.8 roughly. And here again, it gives you a very simple idea to say, what does it actually mean? Because people say, well, I hated math when I was young, so I didn't really want to do that. Actually, it means, in simple terms, we are now in 2025, 16 years since Bitcoin was created, when the first block was mined. So when should we expect a 10 times higher price from now? Like we have variations around that. Well, if you apply this model, it says roughly 50% of time elapsed since then will take until you see a 10 times of higher value. What does it mean? 16 years, 50% of that is 8 years. So in 8 years, Bitcoin should be roughly at 1 million. It's very simple. It comes out of that. And again, it's scale invariant. When people say, wow, this is nonsense because they want to have Bitcoin going to 1 trillion tomorrow. It's like, I've seen that. Like, well, that's not going to happen if you have the power law. I think that's why he gets a lot of people who don't like him, who actually dislike him. I don't get him. He's a character. I love his work. He's doing great, fantastic work. And as well, his partner, what's his name? I think you had him on the show, Steve.
Stephen, I don't know how to pronounce his last name, or Paranoid.
I think he's got Money Debt or something like that.
Yeah, Money or Debt, it's his handle. I think I had 3 people on with the power law: Fred Krueger, Giovanni, and Stephen Paranoid.
And I think great work what they're doing. And I can really, and for me as well, it's something where actually I see that. And when people say, oh, it's going to go up to 1 million within like 1 year, well, that wouldn't be a power law. And by the way, that's something you don't even want to have because that creates instability. I've seen it in the great financial crisis. Suddenly demand for certain products, subprime, goes exponential. That looks cool for a while until things explode. So power law gives a strength. And ultimately as well, you see, because it's power law, a diminishing return over time. So I think that's, so I'm a big fan of his work, of Giovanni's work. And yes, I take that as my North Star, and maybe it's going to blow up in my face. I'm going to age like bad milk, but I don't think so. From what I've seen, I don't think so. And the last point to make here is, I think the model became very popular. I think he already wrote about that many years ago, but then there's, I think this German-American guy, what's his name? Harold, forgotten his name. He made it public, I think, on one of the blogs where he sort of like took the idea and said, well, that's the power law. It was 2019, September. Bitcoin was back then at 2000 at around 8,000, 9,000. So when you take exactly the parameters, and you only have 2 parameters, the slope. That's like, and you really have to take these parameters from back then and calculate the price of today. It will come out at like now, I think $110,000. So that's pretty cool and pretty close. We are like literally in the area, and we moved by a factor of 10 over 6 years. That's, I think, and I like that. I'm not a fan to say what's going to happen in the future. In science as well, and in banking as well, you're being trained about the result to say, what is it what you said and what was the outcome? And it's being measured. Banking and science, same thing. And I love that about trading, and I loved it about that one. It worked very, very well when being tested.
Really, really cool. Yeah, that's why I'm saying Bitcoin. I think my outcome results will be quite good in 10 years. But yeah. I like the way, because I say that a lot and I don't hear that often enough. If the fiat system is the Titanic and we want to get to the safe land, we need and the Titanic is kind of slowly sinking as the fiat is already sinking. We don't want that Titanic sinking in half an hour. We want that Titanic sinking over 24, 48 hours, as slow as possible. So we have time to build out that boat of Bitcoin. So when someone is calling, the Bitcoin price is going to 1 million 2025, is going to 10 million 2025, or there will be a point where just Bitcoin goes to infinity and all the fiat collapses. I don't think that's something we should wish for. And I think you mentioned it in the beginning, where you have this high five moment, but then all of a sudden you're like, oh shit, the whole thing collapses and everyone loses actually.
Yeah, it's a great. By the way, I like the picture you use here. It's a great analogy, absolutely, and because people think, "Oh, I won, I'm smarter." So I was never in the business of trying to look smarter because I'm not than the other guy. So clearly, I want to have a happy and free life, and I want to do things I want to do, and I really dislike having anybody telling me what I should be doing, and really, at the very least, not a government. Not a government or anybody. And actually, I was not a perfect corporate guy either. So Wall Street worked very well for me. The minute I was not a really good, upward manager. So maybe I was a bit too my language was maybe a bit too plain and simple. Just want to say it like that for senior management. So I think absolutely we don't want to have that, because what I said in the beginning, you would create, in my view, a Mad Max scenario. Do you know the movie Mad Max?
I know it, but I've never seen it actually.
That was one I watched, I think, 4 or 5 times. I always liked Tina Turner. Wonderful actor and wonderful artist. She plays the main role. Mad Max. That's a world you don't want to live in. And when the great financial crisis happened, I know a lot of my friends back then, family members, it got very, very nervous when it came to Europe. They got really, and I was very nervous during that time. I couldn't sleep. I worked around the clock, constantly what's happening. All this, it makes you very itchy. And I remember back then that a friend of mine said I had a big house and huge garden. It was in Austria somewhere, I think. Yeah, it was in Austria. Huge garden, beautiful. He said, "Oh, Pius, what do you think? I should buy maybe some coal, and we should buy food and whatever." No. If that happens, what we think can happen, what you need actually is a gun. Because people are going to come over your fences. They're going to steal and potentially rape, whatever they can do. It's going to be a very unpleasant situation, and society can break down quickly. Because that's another thing. People, and that's what I've seen with the great financial crisis. When things break down, that comes out of nonlinear dynamics, what I did as well. When things break down, they break down quickly. And there's no way you can fix that. You just go down. Therefore, when people say that in the Bitcoin scene, my feedback to that is you do not want to wish. You do not want to have this scenario. That's a very dystopian scenario. And unfortunately, we're already getting with the European governments and regulation and central accounts, digital euro, we are already entering a very dark dystopian world, in my view, which sort of irritates me highly. But then to say, oh, I was right. No, I think social unrest is never really a good thing.
That's interesting. There's one aspect that this comes up. I've seen, you described today, but also when we met in Swiss, that you've traveled a lot of places and your home is in many different places, so to say. If you had to now pick one place, especially if let's say that there's actually something happening that you can reside to, and you have to pick one place to root your family in, disregarding your personal situation right now, disregarding any connections you have, where would you live and why?
Well, currently I'm living effectively in London, so that's a place I know. I've been here between 2000 and 2010, so I know the place very well. By the way, Dystopian as well, what's happening here. If you choose a great question, I think, everybody now talks about El Salvador and that type of things. My tail and my hair, clearly I'm not really the South American, Middle American guy here. So I would say Switzerland would be the natural choice because why? Switzerland has been around for many centuries. Actually, has been proven to be a bit libertarian, more on the way they do things. Not so much as well lately. I think they have UBS is by far the big, and I think that they are more regulated as well. Something I don't like. I don't like any form of regulations, especially in financial affairs. And I think that's sort of is a good place to be. Now, if it were easier, Liechtenstein, even great. And it happened that now people say, oh, is this guy in some weird locations? It happened that even speaking English, my accent, I think, gives it away. I grew up in the Alemannian region, unfortunately, wrong side on the German side. So it takes me literally 30-40 minutes to drive to Switzerland or to Liechtenstein, where I grew up. So I know the place. I know the place and area very well. I think it's free. I think in Europe it's the best place. But I think if people in the world, even there, I would say. You should, where you feel comfortable to stay. Now, what I liked as my personal preference is, of course, the United States. It's just a wonderful country, very dynamic. And who knows, maybe I'm going to end up there ultimately. I lived there for many years.
That's it. They have the means to protect themselves, and they seem to value liberty a lot, which I like about the USA, because Switzerland also values liberty, but it's a small country, and USA, in something really bad happening, they have the means to protect the citizens. That's an interesting point.
Yeah, that's true, and this is I think that's these two countries are similar and not dissimilar. I would say Switzerland is a very small version, but they're very fearful, and you're not going to attack them. They're going to go up in the mountains and know how to defend themselves. They've been around for many, and they've been surrounded. They've been around for many centuries and surrounded by a very often aggressive neighbors, France for a long time, Germany especially. And they were able to stand up to that. I think they didn't have to fight. So I think that's a great one. But the United States, I think they're going to celebrate now the foundation, the 250th years anniversary next year. 2026 is going to be huge. I think they're trying to spend some time in the United States then. And absolutely, that is a country which is actually built on the foundation of people who want to escape a Europe which was very dystopian, which were run by kings and by a feudal system, and say, I don't want to have any of that. So they went to the United States, and that's great. And as I said in the beginning, I'm a huge fan of the country. I'm a huge fan of the people I met there. The creativity is great. And I've seen it on your show as well. You have a lot of Americans that come out from the weirdest places, like holy smoke, how is that possible? And one thing not to underestimate, which I only learned in the United States to cherish, which is the free speech, which now suddenly something we never thought very much about that in Europe, but now it means something. And in the US, is like clear defending of free speech, and the Second Amendment is actually a weapon as well. So you should be able to defend yourself. So I think that's a cornerstone of this country, which is fantastic. Which in a weird way, even though Second Amendment, you don't have it like that in Switzerland, but they have the army and people have actually the weapon at home to say if something can happen. So they don't outsource freedom, liberty, or defense to a third party. Germany and France, maybe less so, but Germany and other European countries, people seem they don't really mind, which is crazy. I don't understand that, but I'm just one German out of 80 million.
That's true. One last thing I want to get to is also with your background with Cantor Fitzgerald. You probably heard the news of 21st Capital and then Jack Mallers, kind of the first competition. I mean, there's many competitions to strategy or previously MicroStrategy. How do you look at all of a sudden a lot of institutional investors and a lot of companies are slowly coming in? I mean, a lot is maybe, if you see all the companies, a little bit overstated, but there is slowly movement coming.
Well, it's a great question. There's one side where you actually think, is it great that you have 21 Capital, or the biggest one is, of course, Michael Saylor's you had on the show here, MicroStrategy, who is like now 550,000 Bitcoins and growing every day, stacking every day. It doesn't make sense because it almost feels like now you have like Bitcoin in the hand of you, where it was the idea of like to have it distributed amongst many. So I was like critical, but then my overarching principle in my life is I have a really libertarian way to think and to act, and I believe in like if you believe in libertarian ideas, then you should really follow through as well accordingly. So not to say, oh, I don't like that, but we're gonna have that. So like things ultimately gonna shake out. So if that's where the Bitcoin movement is going, that's few guys hodl a lot. So that's what it is, and it's. Can it break the Bitcoin system? I don't think so. So what do I think of the idea? I think it's a good one, absolutely, because effectively what you're doing, and they haven't really done it in a perfect way. Michael Saylor hasn't done it in a great way. Is doing a great job by selling shares at more than 2 times his NAV, which is effectively how he gets the Bitcoin yield or increases the number of Bitcoin per share. That's a good way. But the ultimate, I think, goal has to be to go into the real debt market, because he plays mainly the equity market and the convertible bond market. But the convertible bond market is a tiny market. I think the new issuance of convertible bonds is like in the United States, 70, 80 million per year. So it's not very much. Currently, the biggest issuer of convertibles is Michael Saylor. Secondly, it's can be a risky strategy as well, because by issuing convertible bonds, the buyer of the convertible bonds are not Bitcoiners. They don't care about Bitcoiners. They are Wall Street guys who do what they call the convertible arbitrage desk. They take it on, they buy the bond, and they short the stock. And the volatility helps them to capture some value. That's in a nutshell. So pretty much, Michael Saylor is effectively selling volatility to buy Bitcoin. But the goal, it's a tiny market. The debt market is more like 300 trillion. That's where I grew up. I'm a debt trader. And a lot of these debts is rated by rating agencies. So and that I think will happen, I hope sooner or later, if people come around and say, listen, I'm going to create debt, structured debt, Bitcoin-backed debt, which is rated and placed debt in the market. then suddenly I think we talk about different scale and I think capital markets activity. And that's, I think, is the real prize. I haven't seen that yet from any of the actors. Are still on the equity portion, but I can see Bitcoin backed bonds can get rated, or where you just sell actually paper money and you buy Bitcoin. Because what effectively you're doing is that you're selling fiat money to buy Bitcoin. Or as my old boss, Greg Lipman from Big Short used to say, buy quality and short shit. So I think you guys can figure out which one is which here in this example. So I think no, I don't want to burn people here, but some people just need sort of like paper money. That's the regulation. And I think if you really get a rating on it, there's a lot of insurance buckets, a lot of people who need a rating structured correctly. Then I think what the work which is done by Jack Muller and that the work is being done by Michael Seyr is a great one, and I sort of like embrace that. But it can be risky as well. If things move around a lot, suddenly the guys who own your stock start selling your stock, and I've seen that because there's too much of the same risk in the market for traders, and that's something you want to be mindful. So you have to be able to issue different instruments, and I think the debt instruments are the best instruments because it gives you stability as well. So I don't know whether Michael Seyr or Jack Muller is working on these type of ideas, but I hope they do. And that's my background. My job was to work with rating agencies and to trade all type of securities. A lot of them should have never gotten a rating, but here, thanks. But done differently back then. So yes, I think these companies, I watched them closely. I think that's a better way to take on leverage, because just yesterday, Robin, I took a look. There's, I think, from PowerShares, is a company, it's an ETF provider in the United States, where you have like double leverage on Bitcoin. This is actually not great. The daily rebalancing, and it's just not doing a good thing here. And when you compare it to MicroStrategy, and I think Jack Muller going to be as successful, you suddenly see actually this does very, very well. And what I like about MicroStrategy is he's seen already like the massive bear market, where he was trading actually below 1. His multiple of NAV was below 1, and now it's above 2. So he's been already bit tested, time tested. I like that. So I think if you want to take a leverage view, then that's a good way. As I said yesterday in a tweet, I would really sum it up like that. If you look on a 20-year horizon and you want to become wealthy and free, no, and you have, let's say, 5,000 euro, it should not be a financial advice. Don't take a financial advice from a former investment banker. But if you invest in gold, and if it does what it used to, you're going to end up with 6 times the money, 30,000. Let's take 10,000 starting, 60,000. If you invest in the S&P and triple Q like the Nasdaq 100, you're very likely going to make 10 times the money. You're going to be at 100,000 in 20 years. Not bad, but yeah. If you invest in Bitcoin and it does what what the power law says it should be doing, then you end up at 1 million, 100 times the money. Now, suddenly in 20 years, you're 25 years and 45, you're free. You have like the FU money potentially already. And if you invest in leverage structure, potentially MicroStrategy, I think it can be a much higher number.
I love the way of, because in previous cycles, we always saw the Bitcoiners that want to get more Bitcoin went to the altcoin way of kind of getting a higher performer. And I actually see the performance and the dominance of Bitcoin is growing, especially against Ethereum, but also against all other altcoins. And I feel like one of the reasons is people can also now just buy MicroStrategy or now Strategy B to outperform Bitcoin. And it's an established company, like you're betting on a company that is around for what, 15, 20, no, like longer than that. They were around with .com.
I think it was around 1997.
Yeah, and it's like almost 30 years now, right? So it's a long one. And when you go in altcoin, there's no value underlying, and you're betting on a product that might be around for like a year, and is probably gone in a year again. So I like the way of when you want to outperform Bitcoin, having MicroStrategy, even though I personally just have like 100% in Bitcoin. I don't deal with anything else, and try to have my Zen moment there.
I think that's a wise. I think that's a very wise thing. You're young enough, and my view is if Bitcoin for whatever reason ends up worth nothing, then you're exactly in the same situation as the other 99.999% of the people. But if it's doing what you and I think it's going to do, then, well, that's a great outcome.
Exactly. That was my thinking. Was like, if I end up with nothing in, let's say, 5 years when I'm 30, I have the same thing that most people have, nothing.
Which changes a bit when you're like my age. I'm way above your age. Then, well, would I say just put 100% in Bitcoin? That would be a bit reckless. But here again, you can say, well, if you really think of your kids and so on, a bigger portion of your private wealth should be part of that. So it really, I think, important as well as time horizon on stuff. So, and I think the Bitcoin society, I think I'm more on the very old side. So I think it's between like 25 to like 35. And that's a really good age, and to say absolutely, that's and we will see. I'm convinced it's going to work out very well for Bitcoiners.
I want to show you something because I see a lot this misconception that Bitcoiners are young people. I want to show you that. Maybe you like to see the statistics.
Absolutely. So let me.
Is it now the right screen? Yeah. I mean, that's just the last 28 days, but that's the data that I'm always seeing. I actually see over 6% of my viewers, and like this is a host that is 25 years old, that over 6% of my viewers are actually above 65. And the majority is around those 35 years to 45 years old. And I talked with exchanges, and they also see the same thing. The retail market is around like 40, 42 years old on an average, which is really fascinating. The first time I went to a Bitcoin meetup, I went there and I expected a lot of young guys, but I was the only one, I think, under 30 years old there. That's kind of, that shocked me when I went. I was already all in Bitcoin, but I never was in the Bitcoin community, like with either data with YouTube or with being in meetups or something like that. But then I went there, and so like, oh, like the Bitcoin community is actually older than I thought. It's like mid-age, like 30, 35. Like you're not old, but for me, I just thought there's a lot of younger people there. Is that surprising for you?
Well, that's actually yes and no. I think one thing, and that's more a question to you, Robin, is like, why is it that young people, like I see 18 to 24 seem to be not into, like maybe they have other things to do and they don't care about financial affairs, but that's when you start out working. So now you've received money. I don't know why that I'm surprised by. I'm not really surprised by the 35 to 44. The older folks, I'm a bit surprised that they're really still in Bitcoin. By the way, and when you talk about investment bankers, I tell you there would be hardly any investment banker because they just don't understand money. And I didn't understand money. I only understood money when I got involved actually in Bitcoin. So I'm a bit surprised by that the young people. Why is that the young guys are not really interested in Bitcoin? You talk to young guys. Is it like it's your folks?
Yeah, it's super interesting, and I thought about that a lot. The first thing is the Bitcoiners don't make the content, because younger, let's say under 20 years old, so like between 15 to 20, maybe even under 15, they're spending a lot of time on platforms like TikTok and Instagram. And when you see where Bitcoin content is actually strong, it's like Twitter and YouTube and podcasts. And this is just not the right format. You also have to see that my format is long form, and that just turns out to be a little bit more older screwed. So I personally have, since I'm like 18, 19 years old, always watched and listened to podcasts. I love that format so much. And I probably learned a lot of things just from podcasts. And then like, oh, I hear someone interesting. Then I bought his book and dove deeper into something. I just love podcasts for getting ideas and getting inspirations. And if there's something interesting, diving deeper on that. And I think that's one aspect that Bitcoin isn't as strong on TikTok and on those Instagram reels and on those platforms. I try to put my podcast there, but like it's a whole different reaction I get there from podcast replies and YouTube comments on the long form. It's really fascinating to see. And then also, if you are under 20 years old, you probably have almost no money. So you maybe have like $1,000 laying around. If you then talk, no, like let's have a 10-year time horizon and you invest some money, you DCA in, it's kind of boring. If you have someone saying on YouTube to you, hey, you can 100x your money tomorrow with that XYC token. Yeah, like that sounds more interesting if you just have like a little bit of money. And that's actually a lot of the things that I get from the I call them shitcoiners, but like altcoin people. I get like, oh, Bitcoin is so boring. It just does like 40, 50% a year. Like I cannot build anything with that. And I'm like, So you basically just want to gamble. Like let's call it what it is. You want to gamble. You want to go in a casino, bet on red, and see what comes out the other end.
Yeah, so absolutely, and I think to wrap it up in that direction is people don't care when they're young about money. One thing is absolutely that when I talk to people my age, a bit lower, and I talk about Bitcoin, which I do really, and I converted quite a few guys. I believe in it like by talking, and I was like, okay. But the first reaction is always, Pius, like, you really lost your plot. You're like selling drugs or crack and like, oh, like opium. Like, it's not. I think it's like, that's really this first reaction. And only when I say, listen, unlike the guy from a freaking Sparkasse, saving a loan bank in Germany, I don't make money out of that. I don't. It's like, it's for you. It's like, it's free advice. I don't want to have anything to do with that. It's for free. Yeah, I don't, like, people still believe the guy from the same loan banks, like, well, you know, they live in all this like wonderful building. Somebody has to pay for that, and very likely it's going to be you. So I think that's the wonderful idea here. And I think when it comes to Bitcoin, and I think we had an overarching theme on the financial markets system. What I found now the last couple of days very interesting, and it stuck with me. It's like from age. Warren Buffett, 94 years old, decided to step down as a chairman. Berkshire Hathaway, 60 years, like 20% annualized return. Fantastic. Best investor of such long term, I think, ever lived last century. But he hates Bitcoin. I think it's really bad stuff. I think rat poison, all bad words he used. But interesting what he said about financial markets and currencies. First time, I think, where he said, well, I think it might be time to diversify away from the US dollar. That was interesting. And secondly, he said the incentive of governments is, unfortunately, it is what it is, to be in a business to devaluate the currency. That's just what they do. He said, I'm not saying they're evil people, which I disagree. I think they're freaking really evil people, really bad guys. But the guy is 94. He doesn't really want to. But he wants to. If he dies, he wants to say, "I was a good guy." And it was interesting the first time where he actually said, "Well, the valuation of currency was just inherent in the system. and maybe you want to diversify away from US dollars. So a guy who's like all American. So I thought like that is potentially, even if he doesn't like when he talks about that Bitcoin, I think it was a very great advertising for Bitcoin.
It's interesting because when I started investing, I consumed Warren Buffett content like crazy. Like the Warren Buffett mindset of investing and looking at stocks was the way I started actually with stocks, which later led me to discover Bitcoin. But we are already over time. We have 2 more questions. The first question is always the same question for every guest, and the first question is, what can we learn from you besides Bitcoin?
Common sense. Apply common sense when you invest and in your life. I think common sense. Question pretty much, don't take anything for face value. Just challenge it with common sense.
First principles thinking. I like that. The second question is the end routine, where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asks you the question, what is your most unpopular opinion about Bitcoin?
My unpopular opinion, I think that it's the best asset class out there. That's an unpopular opinion when you talk to bankers.
That's true. It also matters like unpopular to whom.
Yeah.
Really cool. Thank you so much, Pius, for being on the podcast. Before I let you go, where can people find you and ask you questions?
Sure. My footprint is a simple one. It's an X. I'm literally only an X. I don't do LinkedIn. That's too much corporate echo chamber. I don't need that. So it's Pius the Banker. So that's where they can find me. That's where I tweet, mainly around Bitcoin, financial situations, but politics as well. Once in a while, that make my blood boil, so I cannot help myself. So that's the best way to find me.
Thank you so much, Pius.
Thanks, that was great. Thanks.
Thank you so much for being on, Pius, and also thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.
Thanks.